How do you start a business at 20 years?
We didn't spend any money to build it.
Any notable names that you caught on early that are sort of well known right now?
You're not going to get as much engagement unless you invite people from the community to participate.
Co-founder conflict is one of the main reasons that startups fail in today's day.
I'm trying to run my own side business, and this thing is just taking me off my game.
How do you go from internet business to real estate? What was that shift? Why that shift?
Pitching a project or pitching a business that doesn't do that.
How does a 25-year-old raise $13 million before there's nobody selling a course on how to raise money? Hey guys, welcome back to Funds and Founders. Today we have on James.
Yes.
And I like kicking things off by asking, where did your entrepreneurial journey start? When and where?
It started off in Connecticut. First of all, also, I want to thank you for having me.
Yeah, for sure.
This is awesome. I've been listening to your podcast.
Thank you.
And digging in since Justin showed it to
Nice.
me.
Nice.
And he was the first one on the thing.
Yeah. He's episode 1 and then episode 52.
Oh,
So I did a second episode with him and he wants to be episode 52. So like a whole year sort of like contrast with, hey, what he was talking about then versus what he's talking about now. So
what he's doing is very timely.
yeah, that is true. But yeah, no, I think with him, very philosophical kind of episodes. Like he goes really deep into like different concepts, but that's nice. And I joke that YouTube retention is, 4 or 5 minutes long.
Yeah.
So if you want to plug anything, plug it right now. Who should reach out if you're looking for anything? We'll plug that right away and then we'll go into that.
Sure. I mean, as far as reaching out to me, connect with me on LinkedIn, James Waba, Wahba. I'm interested in connecting with everybody in Austin.
Nice.
I want to meet all the interesting people in Austin. I just moved here, so I'm excited. I'm like happy to explore, happy to connect. That's my mission, is to help people connect with people.
Nice.
And try to bring value to them in some way. So that's my mission here. But the entrepreneurial journey started back in Connecticut. I grew up in Greenwich, Connecticut, had a paper route, riding my BMX bike, delivering newspapers. For me, having that route was everything. Everybody, like all the neighbors, I call them members. Now I call them members. Back then, they were neighbors. And I wanted to have like as many people on my route as possible. So
How old were you then?
I was pretty young. I was in 4th grade.
Okay, nice.
So I don't know, 12.
How much do you think you made from that? Like if you had to...
Total? I mean, I did it for 4 years.
Okay.
So I don't know, maybe like $4K.
Nice.
Yeah.
If you had to pick out one thing that you remember from doing that paper route, what has stuck with you throughout?
Well, I had to be on time. I had to make sure the newspapers were delivered at 4 p.m. on weekdays. So that was important. This is also print time.
Yeah.
So,
yeah.
This is like basically probably like 87 or so. Not to date me, but yeah, it was a long time ago. I wanted to make sure that I was delivering on time and then adding new subscribers. So I would go door to door and say, hey, do you want to resubscribe or do you want to continue? And then, if you could add a lot of subscribers, you could get like bonuses from the local newspaper.
From the local paper.
Yeah. So
nice.
I got it. I got the most subscribers one week, and they gave me a ski trip in upstate New York. So that was amazing. So I was really psyched about that. And I was young too. I'm like going alone on the ski trip, trying to figure out how to do it.
Looking back, you probably understand now what you had. But in that moment, did you understand the kind of business you were in? Because at the core of it was like a small business, right? Do you think you understood those fundamentals and you were learning, trying to make sure customers don't churn versus how do you make it more fruitful for them to subscribe and, use your route versus someone else's? Oh,
yeah. I mean, even back then, I could tell every time I got a new subscriber, my check was bigger.
Nice.
I couldn't break it down like per subscriber. Customer,
yeah.
But, I was just excited to see it. I had more money to spend on candy and like skateboarding magazines and stuff,
Nice.
That was basically like the ROI for that.
Were your friends very entrepreneurial or were you like the only one who was like, making some cash on the side?
Well, one of my friends, I inherited it from them.
Okay.
And
cool.
So they were doing that and, but they couldn't do it. They got busy with school, which is fine. And I was a little younger than them, so I could handle it. And, I don't know, it's fun. I felt like I had some ownership of something that was making some cash. And my parents are also entrepreneurial too. So it was like in the flow, trying to build this thing. And they were supportive too. Nice. My mom was a big helper on Sundays when we had newspapers like this thick.
Nice.
She would help me. She would drive me around with those. But I don't know. It was also a great way to connect with the neighbors.
Did you invest any of the money or was it all candy and chocolates?
I didn't spend it all on candy and chocolate, but I think I just kept it. I think I just rolled it over into my savings.
Nice.
But it was great. I just felt like a sense of ownership, and a sense of community. This was the town that I grew up in, and I was delivering newspapers to all these people. Remember them, for the rest of my lives, and it just gave me a connection to the neighborhood.
Nice,
which plays into later on.
Yeah. So where do you go from there? So you did this paper route. Yeah. What are sort of the second, third pseudo businesses you started, even if they were smaller?
I guess the next one was doing video, recording concerts. So I got into film school and I was shooting a lot of concert video, going to like hardcore shows, punk shows, rock shows, indie rock shows, and recording them and getting basically paid per shoot.
Nice.
And it was fun. It was a great way to go to all these awesome bands and see all these bands play live, and also get my friends in, hire them as like the sound guys, and it was fun to just do that. And that was basically like middle of high school.
Nice. And you made money from this?
Yeah. I mean, it was small. I mean, they were paying the basics. Like I had a great camera, which was nice. This is before film school. This is actually what got me into film school.
Nice.
But then after that, halfway through film school, I started an internet company in 1998. And that's when my brother and I moved in to New York City from Connecticut. And it was one of the first online streaming sites. So we were streaming short films from filmmakers that I knew in film school.
Nice.
Basically like trying to build a community of filmmakers to show their films online. And this was like way before YouTube, obviously. And there was a little bit of like, we had some kind of insight on figuring out how to do it. We had a friend who was pretty technical and they knew how to encode video, basically take analog tapes and convert them to digital files. So we were able to stream them. And that was like our breakthrough. And then we got a deal with Microsoft. They had a thing called like Microsoft Media Server or something like that. And we got one of those and we demoed that for a year.
Nice.
Which wasn't the whole time that we were live, but it was a long time for us to use. So
what was the outcome of that business? Was it successful? What was
for me, it was success. I mean, like we learned a lot about marketing, promotion, how to build a movement and get people to do something.
Nice.
And I was passionate about what we were doing, like the films that we're showing. I knew that we were giving a second life to the films that these filmmakers had made. They'd made short films and they would do the festival circuit. And then after that, they kind of just like are like a resume builder, and they don't get seen, and they kind of just end up sitting in like a drawer. So we wanted to give them a second life. And then there started to be some competitors coming out. So it was fun to like be early, find other competitors coming into the market, competing with them, trying to match them. I was like 20 years old, and so we were pretty scrappy, and we were having a great time doing it. I don't know. It was just awesome to like build a movement back then.
Nice.
It was also early days for tech, so we were excited about like what was going on.
What I don't know when exactly like the .com bubble happened, but sort of
that was like early bubble times.
Okay, that was early bubble. Okay,
yeah, 98, and it really crashed 2000.
And so you had some momentum on your side from like internet business point of view. Before we even get there, how do you start a business at 20 years? Because like in today's world, there's so many sites. I can Google how to do XYZ.
Yeah.
As a couple of 20-year-olds, how do you figure out, hey, we want to make this a business and here's what we want? Like you had the idea, but how do you go from, hey, we want to build this community of filmmakers to what are your roles? What's the company? How do you formation? Like, I don't know if there's a trajectory you took, you sort of just, figured it out, but talk about how you went from, I have this idea concept to, hey, this is an actual legit business.
Looking back, I don't know how legit it was. It was an entity. We did, create an entity. We did have a website. We did have a bank account. We were operating it. We did have an email that was attached to the website. Yeah. It wasn't just like hotmail.com. So it was as real as we could make it. Nice. As real as we knew it should be.
Yeah.
We were trying to raise some funds. We did a strategic partnership with a company, and they basically gave us like free. They had a data center, and we were able to utilize it to stream
streaming space.
Yeah, so it wasn't like they gave us $800,000 worth of funding, but they did give us a lot of free bandwidth. So that worked out pretty well.
Post-production is pretty good nowadays, so we can cut everything up, touch everything up. So,
nice.
Don't be too worried about that. So you go from idea to, hey, you're starting this business?
I
right?
also have to say, I did this with my brother and my best friend.
Okay.
And so it wasn't all on me. I mean, we were really kind of like brothers in arms trying to figure this thing out. You know, like my best friend did acquisitions for films. He would go out and meet the filmmakers, try to get them on board. He was focused on that. My brother was really good at doing the more digital side, the back end side, and the front end as far as like the website. And together we collaborated on like the vision of what we wanted to do. The goal was to get 1,000 filmmakers on the site. So that was like our let's keep on doing it. Yeah. And we would
like
go
your
to
KPI for that time.
Yeah. And also like as far as like views and streams and clicks and hits, all that stuff was so nebulous. Nobody even knew what the metrics were. We're just, if you got covered in like Wired magazine,
that was successful.
That was successful.
Yeah.
And so like traditional media covering online activities, like on some kind of website, that was a success. And the idea is like you keep on getting that, then someone's going to notice. You didn't know exactly who, but you just wanted to keep on building something.
Nice.
It was also a really cool time in New York City as far as like Silicon Alley, the early days.
So what was your user acquisition trajectory, right? If you remember, and it doesn't have to be exact, but just roughly users were signing up. Like what were some milestones you guys were hitting? Did you get to the 1,000 users?
Yes, we did. 1,000 films.
1,000 films. Okay.
Across 300 filmmakers.
Okay. Nice.
Because we got some like libraries of films.
Nice.
That were in public domain.
And people could view and play back and watch and everything.
I mean, you could do that at work. It was hard to do that with the 56K modem. If you, not everybody had broadband, but you could stream it at work.
Nice.
We would have streaming parties at our loft apartment just so people could see them because we had, good bandwidth where we were. But as far as metrics go, I mean, we did crack a couple networks of like the NYU film community was a great network to crack because they all knew each other. They were also producing like $20,000 films. So they looked great and they were great.
So once one of them found out, it was.
Yeah. And I think I met one of them at a concert and then he introduced me to another guy. And then, a bunch of those filmmakers are making films now, which is pretty awesome to see the growth.
Nice. Any notable names that you caught on early that are sort of well known right now? Not that I know any directors or producers, but just for the clickbait, we'll title the episode.
Well, I think his last name's Newman. I can't remember his first name for some reason. I don't know.
That's fine.
But
we'll look.
He did some kind of he was really into Star Wars.
Okay,
that's all I got right now.
Okay,
yeah,
pretty cool.
I'll probably remember by the end of the podcast.
Okay, yeah, for sure. Nice. And so you guys start this. Was there any conflict amongst you, your brother, and your best friend? Because I don't know the statistic by heart, but co-founder conflict is one of the main reasons that startups fail in today's day. But if you had to look back, were there ups and downs, or was your relationship with these guys so solid that nothing was ever an issue? It
didn't get contentious. We knew that this is secondary to our relationship. I mean, my brother's my brother. It's not going to go away.
Yeah.
B, my best friend. We were best friends since we were 13. At this point, we're 20.
Okay.
And we're still best friends.
Nice.
So we're locked in as far as friendships and relationships.
And the reason I ask is for any entrepreneurs listening, not everyone has a best friend or a family member to go in with. But also, I think today people are very vocal with expectations versus work style versus I think people get into these relationships before understanding why you're getting into this relationship and what each party is expecting. And then there's always falling out. I've had a couple guests on the show who recently had splits with their co-founder and they were not okay, we'll just go our own ways. They were gruesome, hey, you pay me XYZ for my equity or I'm not going to give you the IP. Really hard conversations to have.
Oh yeah, I think I heard you talk about that.
Yeah, and then I feel people don't think that far ahead. They're just idea, this startup, I want to raise, I want to do this. But really understanding who you're building with, because building a company is really hard.
Yeah.
And if you guys are not solid or with your co-founders, then there's going to be a lot of ups and downs. And when some of those downs come, you're going to lash out at someone you shouldn't be. But that's where all this conflict gets great, which is why I ask.
And if you can try to figure that stuff up front,
yeah.
Okay, if this happens, here's how we resolve it, or bring in somebody else to help mediate that.
Yeah. And I think that's why I ask, because a lot of people say that, hey, you should never start a business with your family or your best friends because, your relationships intermingle and a business relationship is sometimes doesn't work if you treat each other like really family, right? And then so there's a lot of context to like the kind of business, the scale of business, but still, I feel like really understanding who you're getting into a business relationship is super important to
100%
for the success of the business.
I mean,
as well.
part of the issue is if you do that with a family member, you might see them at Thanksgiving or like during the holidays, and like you can't get a break, and sometimes you need a break from your co-founder. We always talk about business with my family anyways, but it's hard if there's some kind of like internal turmoil or something going on.
Makes sense. Yeah. So you guys are doing this, you're hitting milestones. What does the journey look like? What does the company building journey look like during that .com crash as well? I don't know if you just want to say how long you ran the company, because I don't remember.
So it was from 98 to 2000.
Okay.
And then we started to explore real estate around 2001. Nice. So
did you like shut the business down or just, fizzle off, or like what was there?
Fizzled off. And it also was a moment when like all the companies were closing.
Yeah.
There was like ridiculous companies that were funded. They didn't really have a business model and they closed. So it wasn't like, oh my God, I can't believe we're the only one that's falling apart. It was fine. Also, there was like, it was just so nebulous,
Yeah. It just happened. Right?
Yeah. Nice. I mean, the experience was so much fun. It didn't feel like a pain that it was closing.
So how do you go from internet business to real estate? What was that shift? Why that shift?
Well, so after dealing with something nebulous and so early on, my brother and I just wanted to get into something that's like tangible, real estate, property. What can we do to add value that it's known? When we do X, when we do Y, it gets so much better.
There's less ambiguity.
Yeah. And we knew, and there was playbooks out there. There's lots of books about real estate and investing and what you can do as far as like improving property. And so our family had a business that was in Virginia, and it was a waterfront property, but it was an industrial site. And the town wanted to convert it from an industrial site to like a residential property. And so we put together a plan, got the zoning approvals for it. It was about 450 units on 27 acres on the water. And that was an amazing experience too, because we had to work with the neighbors to get them on board, because moving a factory can be contentious in a neighborhood.
So was it like a full tear down and rebuild
sort of situation?
It would be, yeah. Okay.
And then, what kind of building? Is it going to be a high rise in the middle of this residential area? Or is it going to be like a mid rise? Or is it going to be mixed use? So we really got into like urban planning and trying to figure out what the city wanted, what the neighbors wanted, and bring that all together with an architect and engineer. And that project, like, it was a great breakthrough for us as far as like changing the value based off of the plans. We didn't spend any money to build it, but we still increased the value of the property because we got the zoning changed.
Nice.
And that was just a major breakthrough for us. And it was a great win, I think, for us.
So if I understand what you're saying, you're basically saying you took this asset class, you figured out an end trajectory where, hey, if we do this, we add value. If we do this, we add value. If we do this, we add value. And so what you just mentioned is you took this property, you went and did the zoning for it, which was more just labor at that point. There was I don't think there's any cost associated.
Well, I mean, you have to pay engineers.
Well, yeah, paperwork. But like as in it's not like a couple $100,000. I don't know how much zoning costs, but
it could cost a lot depending on how long and how the complexity.
But you took the asset, you got the zoning done, and now it's worth more, right? Yep. So that's the unlock that you're talking about.
Exactly. And I think that just opened up our mind to property development, and so we took that model and we started to do that in our town that we grew up in, in Greenwich. And we had a property there. It was on the water as well. And we learned a lot about like zoning and waterfront. There's like, it gets tricky with environmental issues and, just access.
Structural issues as well.
Yeah. It's tricky. And also in industrial properties on the water, there's a lot of just cleanup can be tricky.
Nice.
So we had to figure out how to clean up this property. We also had to connect with our neighbors and get them on board for a change. So going back to the old paper route story, it's good that I knew everybody on the streets. I knew all the families, and they were our supporters for this project. So that one took a long time though. The town is pretty conservative as far as like what they want built. And, they just go really slowly. So that one took a long time to get going, but...
and And so are you carrying out full builds, or are you just doing zoning and offloading to like a builder or GC, or like how much of the process are you taking care of?
In Greenwich, it was the full build.
Okay, nice.
And that was also a great experience. We raised about $13 million for that. And I think I was, at that time, I was like 25 and my brother was 21. So we were pretty young, but we were just gung ho, like dug in. We didn't have the resources that we have now as far as like just searching. Like Google wasn't really happening back then and in the early days. And so I don't know. I mean, we just like cracked the books and worked with consultants to try to get this project done.
How does a 25-year-old raise $13 million before there's all, like you're saying, there's no Investopedia, there's no guides, there's nobody selling a course on how to raise money? How did you figure that out? How did you raise $13 million?
I mean, we had a vision for the property. We knew that it should be a waterfront property with a marina, boardwalk, creating public access for the neighbors to access the boardwalk. Half of those slips would be available to the neighbors. Half of them would be available to the residents of the condo project. And I just think we had a good vision for it. And we had great architects. And it's better than having an old heating oil facility there. So the alternative was fine, but we could make it so much better. We also got all the market data. People were selling condos for a lot back then. And so it supported what we were trying to raise as far as the construction costs go. But I'll get to the conclusion of that one a little bit later on.
So how many no's did you get?
Oh, we got like 24 no's.
24 no's.
Yeah. I mean, we went to like banks, but this is also because it took a long time for the zoning. The town really delayed us and they dug their heels. And we had to settle with them to get a final agreement on what we could build. Problem is that all happened in 2008.
Which is when the financial crash happened.
Exactly. Yeah. And we're already in on it. And we're already, like doing the site work and groundwork. And so it's one of those things like, do we keep on going or do we stop? It felt like we could keep on going until we realized that the housing crisis was real. And it was not just in pockets like Las Vegas and Arizona and maybe in Texas. It was spreading. It's everywhere. Yeah. And so people weren't, the banks that we were going to, those banks were going under. So when we should have realized then if the banks are going under, it's probably not a good time to continue on because those banks are going to be the banks that are going to be funding the project, and funding the buyers. So that was the issue is that the buyers weren't able to get funding to buy the property, to buy the units that we were selling.
So even if you did build.
We did build. We built 1/3 of it.
Nice.
And we weren't able to go to the next 2/3.
Because of the market and the crisis and everything. Exactly. Yeah. So did that property end there? Or did you pick it up back years later, or how did that?
No, basically it was like we were done after the first building. Okay. Which is fine because we left a nice, beautiful project there.
It wasn't like a construction site.
But no, and it was completed, and people live there now, and it's in my hometown. I can see them living there. There's boat slips. It looks great.
Nice.
You can see it on my website. It was a very personal.
Nice.
And I have a lot of pride in the project. I think it was really great. It looks great. Still does, which is nice to leave some.
That's nice. Yeah. And it's also like, I don't think a lot of people can go to, especially a hometown where, everyone knows everyone and be like, I built that, right? It's a lot of people that not a lot of people can show physical impact to a society in that sort of manner. But I like that. So how do you go from here, right? So done a couple different ventures, market's crashing. This is, I think, now the second time that you build something in an industry that just tanked, right? Like within that, right? So what does that do to your confidence as an entrepreneur who's never really had a 9-to-5 and is sort of just always doing their own thing? I want to say, and more often than not in these situations, you're your own boss, you're calling your own shots, right? Mm-hmm. What does that do to you? What does market tanking on everything you decide to pick up do to sort of your psyche at that point? Or did it just, you didn't care? Or
I mean, looking back, if you think about all those situations, I think the idea is just like, be faster. Like you have to have that kind of urgency. We did have the urgency. It's not like we didn't push, but still maybe finding earlier exit points.
Makes sense.
Like faster to those earlier exit points so that you, like if something crazy happens and the whole world collapses, you're not caught. Or figure out ways that you can like extract some kind of value and pocket it. And then everything after that's bonus.
Makes sense.
So that would be one thing I would try to do there.
Would it be fair to say that what you're saying is to
I'm not
fail
saying
fast or to just...
Oh, like there could have been some other steps.
Makes sense.
We could have turned it into a parking lot.
Yeah.
Rented out, just had like just a huge parking lot full of boats, like, dry dock boats, or parked cars for the train. Could have done that. Maybe that would have cash flowed it. So finding out these like little ways that could have like weathered the storm, that would have been an amazing move.
And is this more from the point of view of how do you find liquidity from this? Or is this more like you're saying, create value points in the trajectory that, is still adding value to sort of your portfolio and you're that? Or
I think find ways to weather this. It was really find ways to weather the storm so you can get to your end goal.
Makes sense.
We could have just cash flowed it off of a parking lot. Maybe.
And then still been able to build it out completely.
And then, maybe decide we want to sell the whole thing to somebody else and not build it. But it cash flowed in the meantime. And then, if we held on to, 2011, might have been better.
Yeah. But then again, like to your point, you got to have some cash balance.
Yes.
To be able to hold on, right? So like, as in, if you're not cutting yourself a paycheck, there's no value for you. You're not able to extract any money. It's really hard for you to hold on to a property for 3, 4, 5 years or however.
Yep.
But that makes sense. I like that.
Finding ways to cash flow it in the meantime is a great move. That's what I would do with any kind of development now.
So when you pick up projects now, do you always think about early entry points and early exit points?
Now I think about earlier exit points. Taking some wins, getting on base. Don't have to hit the home run. Don't have to hit the grand. You don't need the grand slam. Just get on base, get things moving, and find out where you want to go to where you'll be safe. I mean, this is really like what your mentality. If you're bootstrapping, I think it's different when you're just trying to raise like billions and billions of dollars, and you can do that. Then you probably are playing a different game.
Makes sense.
You're not worried about survival.
Yeah,
you probably are paying yourself. Like I'm sure Sam Altman's doing okay.
Yeah.
He's not worried about cash flowing.
What's your quick take on raising money for a venture versus bootstrapping it and sort of finding these wins and victories to keep the project going?
I think raising funds, putting some of your own cash for like real estate, if you put some of your own cash in there, raise funds from other people would love to invest in projects that are good and get a good return. So for real estate, totally think you should do that. I don't think you should go all in, all alone. This kind of goes back to like my big thesis here is that if you want to be a successful entrepreneur, you can't do it alone. You can't be in a silo. You have to have other partners. You need to have other perspectives in there.
100%.
And I think back then we were scrounging to figure out all the answers ourselves. And I think if we had some more mentors when we were that young, we would have had some other options or just other ideas to examine. So, and we did have some great people around us, but still the people around us were like, the mentality is build it, what you can't not build it. It's like, being an explorer. If you've gone too far, you can't go back. You have to go forward.
Makes sense.
But there might've been some other like stop off points that we could have gone to.
Yeah.
So as far as fundraising goes for like a big tech problem where the market's there, go VC,
Makes sense.
Depends on the business model.
100%. Yeah. And the reason I ask is I feel like for entrepreneurs who are not seasoned or haven't done a couple iterations and been in the journey themselves, there's this glorified vision of, hey, you got to raise VC, be a big company, or you're not successful. And the reason I ask a lot of my guests this is I want to just show the example of not everything has to be $1 billion company.
True.
I think $1 million, $2 million, $3 million company that's doing 10, 20, 30% profit every year is a really good company to run. And that's a 3, 4, $500K paycheck for you. And I think those are really good milestones. Not everything has to be a raise big money and become a really big company or crash, right?
Yep.
And I think a lot of people also don't understand the VC's incentives or the investors. Like, it doesn't matter whether we talk about tech or real estate. When someone's investing in a real estate deal, they're expecting return, right? It's not just free money for you to do whatever with. You have a duty to, like, hey, we project 30, 40%. You're trying to get there unless shit hits the fan, different situation. But still, your goal, these investors are incentivized in your project because they want to get a return back on their money, right? Same thing with VCs.
They want to return their whole fund on one deal.
Yeah, exactly.
If it can't do that, they're not interested. So pitching a project or pitching a business that doesn't do that, you're not going to get anywhere. So you also have to look at the size of the fund.
100%.
Because if you're like 1% of it, it's hard for you to cover the whole fund there.
Also, fund life cycle, and I think I was talking about this a couple of episodes ago, where if someone's doing like $100 million fund over 7 years and they're in year 5 and deploying a check, they want something within 2 to 3 years. You don't have 7 years at that point.
Yeah.
But I feel like people, when you're desperate for cash and you see a check, you just sort of like, I'll take that. Doesn't matter what my deals are.
Yeah.
And so I think that's where just a little bit of experience. And like you said, you got to have partners involved. You got to have advisors and mentors, and someone has to show you the other side of whatever deal you're doing.
Mm-hmm.
And like, you got to look at pros, cons, what happens if this happens, what happens if this happens. So that's why I like asking that. So you do this property. What's next? Yeah.
So the market crashes.
Yeah.
We successfully built it. We felt good about that. Couldn't do anything about the market crashing. And that's really, in our mind, we're like, we did the best we could do. We built it on time, built it under budget, but the market crashed. It's not our fault. I didn't feel like we
failed.
I didn't fail. I didn't feel like we failed. But we wanted to do something that was just cash flowing.
Yeah.
Something that was in real estate with people, cash flowing, but also something that soothes our soul. Something that made us feel good. So we were working out of a shared office space in Soho. My brother and I were there. We were basically subleasing a desk from somebody who was subleasing a desk from somebody else. So it was like 3 stages removed. And the guy who actually had the lease was just like in the back, and he was tired of running the place. He had about like 30 different companies working out of that space. And we're talking about like the desks were literally like this big.
Yeah.
A 4-people company like this, paying like $125 each seat. And he came to the back. We were like in like the storage area. It was like the cheap seats, literally. And he's like, I can't handle this thing. I don't want to run this place anymore. Like the power went out and the toilet like overflowed. And he was just like, I'm trying to run my own side business, and this thing is just taking me off my game. And I'm like, I will take it. He's like, really? I'm like, yes, I'll take over your lease and I will run the place. He's like, oh, okay, that's awesome. And I'm like, so we'll come up with some kind of way to pay you out. He's like, and you'll give me like all the security deposits, and then I'll be responsible for the security deposits. He's like, here's the thing, I basically like spent the security deposits, so I don't have them. So that would be my payment to. He just offloaded it to me. So I took over the lease, and over that weekend, my brother and I were thinking about what can we do to build a community of entrepreneurs. We had been working in Connecticut, commuting from New York City to Connecticut, and we felt like we were missing out on that entrepreneurial spirit. This is like pretty early on. This is around 2010, pretty early on in the New York tech scene, like resurgence.
Yeah.
And so we were starting to see and hear about these companies and see these entrepreneurs in the space, but we wanted to be around them just to understand like, what kind of businesses are you building? Like, what's next? Where are things going? And we want to build a center for those people. There's one other co-working space down the street from us. It's called New York City. And that
New Work City?
Yeah.
Play on words, I'm guessing.
Yeah. They were, so that was already in play. This place was already in play. But we wanted to rebrand it, and we wanted to create a different model where instead of like just listing a desk for rent on Craigslist, there was like an application process. And a lot of these entrepreneurs that were in the mix back then, they were applying to go to these incubators. So applying to a place is not a big deal for them. And we wanted to kind of create that environment where you apply to join this coworking.
And also there's like a premium tag to like, you got to be vetted to get in.
Yeah. So. And that was a real thing. I mean, people, we sometimes decline people, and we would, because they had like an alternative motive or some kind of like usage that just wouldn't fit. Yeah. Like, like we're a dog grooming company and we need all of our dogs here. I'd be like, sorry, it's not going to work, or some other kind of thing.
It's like every community I see now, the rules are no dating or soliciting. And like every like entrepreneurship community is like, this is not to find someone to date. And I'm like, I understand why people like so blatantly say that, but to your point.
Or they're like, they sell some kind of software or some kind of like thing. They're like, I want to join the community so I can sell to all the members. And I'm like, just
Just come and sell.
Or be a sponsor or something, So we did want to create a application process where people had to come in. I would interview them, see if they're a good fit. And it was the best thing we ever did because it did set the bar a little higher.
Nice.
And I got to meet amazing entrepreneurs. I got to scratch my own itch about being inspired and talking to interesting people every day. And we started getting applications and started to build a good word of mouth. Members were referring other members. We cleaned up the place. We changed things up. We converted it was called Soho Haven. We turned it to Projective Space. That was the new name, Projective Space. Came with a great logo, good branding, great website. And we made it really easy for people to join.
And you basically polished things up, hired the bar. I'm guessing also increased rates at that point. And
we also changed operations. Before everyone had a key. People were paying by check, by cash. It was all over the place. It's hard to understand who's paying what.
Yeah.
So we systematized it, and we had to build some systems in the back end for it, which was also kind of fun too. How can we collect? We were using PayPal to charge people, but we shifted to something else.
Nice.
It started evolving that way.
How long did that project go on?
So that was a 10-year.
Nice.
So that was the first location. We had 3 locations in New York City. WeWork had just opened down the street. So it was whoa, this is not just us and the other guy. This is a full thing. And we would have Adam Newman coming through, our co-working space, and he'd basically looking at all the names in the mailboxes to see who's there, so they could solicit them to join his space. So he was a character for sure. But we also started to attract really interesting companies. Uber joined, Indiegogo was there, and this is when they were small.
So,
I mean, Uber had only raised $12 million back then.
I don't know the founders. No.
Yeah, Travis. Yeah, he was there, but he was based in San Francisco. But when he was in New York City, he was in our space. He was wearing a suit.
Nice.
Because he was meeting with Goldman Sachs and he was drinking this 5-hour energy drink and doing push-ups in the hallway. It was full on maniac, but hard driving. I think he's one of the best entrepreneurs, maybe he's in full founder mode all the time. And maybe that's not the way it worked in the future, but
nice.
I don't know. The guy's pretty.
Any other notable companies that were early on in your space?
Oh, sure. So Instacart, Stripe, Indiegogo, Uber, Atlassian, Airbnb, and these we did everything we could do to help them grow. So when they were hosting events, we went all out for them. Nice. We gave them space for them to onboard drivers, shoppers, whatever they needed. We turned our event space into an onboarding space. So we went. I guess above and beyond. And it was exciting because, you get to see this company onboard drivers and give out free phones if you want to be a driver for Uber and just to understand the process and to talk to them just after work, also happy hours and meetups. It was just a great way to connect and had to hear what they're up to.
In hindsight, instead of payment, you should have taken equity.
Yes, should have.
What's the story of that guy who painted a wall for Facebook?
Oh, he did a mural?
David something. But yeah, he's an actor, comedian, but he painted a wall and allegedly his shares were worth $260 million. Whatever he took that day in shares. But
did he take it?
Yeah, he took shares.
That's good.
But I don't know how much of it he made because he's supposedly a gambler. But these are all stories I've heard. I don't know him personally. So, but then there's the other story of, was it Beyonce who did a show for Uber and her pay was supposed to be $6 million, but she took $6 million of Uber equity.
Oh, really?
This is pre-IPO. I think those shares are worth 300+ million at IPO, and I don't think she sold. I don't know if she has now or not, but
I mean, it was a revolution.
Stuff like that. I was you have this space, and the first thing that comes to mind is, how do I trade equity for this? Because I'm just starting to understand, angel investing and that kind of stuff, and how do you build equity? I do think it's a little late in the game in terms of it's really hard to find those unicorn hits. But to your point, early on, there's only so many companies. So even if you take a bet on all of those, most of those are now 100x, 200x. But I don't know why it's the first thought that came to mind. I was
no, it's
a great something.
Thought. It's a great thought. It's also something that I've been thinking about recently. Yeah. Cultivating that community, attracting those founders, connecting with those founders, I think is something that we figured out how to do really well.
Nice.
I'm an entrepreneur, so it wasn't a stretch for me to connect with these people.
Yeah. And because you relate, right? You've been doing that in the similar spots as them. So it's not you're not speaking from a point of privilege. It's more hey, I know the journey you're going through. And you know the challenges. Yeah.
completely excited to hear the stories.
Yeah.
You know? It was totally genuine. It's just how I felt.
How big did the space become over 10 years?
So we had, over time, I think we probably had about 3,000 members.
Nice.
In about, I think
3,000 companies.
3,000 individuals.
Individual. Okay. Got it.
And about 300 companies.
Got it. Nice.
And we hosted like 4 events a week. And it was fun. It was hopping. Nice. It was fun. It's a place to be. We had CEOs of Spotify come and speak. We had all the VCs come and speak at our space.
Nice. So did you own all the real estate, or did you lease it all?
I was leasing. Okay. It was great. I just really missed that community. I think managing the space, renting desks. I mean, really, it's about renting desks and providing resources as far as like the physical space. But what I like the most about it is connecting with people and building the community.
Makes sense.
Creating events, helping the entrepreneurs out with like any kind of challenges they have, whether it's like they need a design team, they need an agency, they need funding, they need another co-founder. They have a great idea, but they just don't have a technical co-founder. They need that person. I knew everybody because I kept on interviewing everybody for 10 years. So I have built like a pretty good network, and I knew what everyone's up to. And I could connect them all.
Nice. It's like every time someone says, I need X, you're like, oh, I literally just talked to someone.
Exactly. Or your company's just starting. That company has been here for 6 months. They start off as a team of 2. They just raised $12 million, and now their team is a team of 22, and they're growing. Happy to introduce you to them.
Nice.
Like they're in the same industry.
Nice.
And happy to connect them. So anyway, I could just make it an easier experience. I wanted to.
Nice. I like that. So if you leased all the real estate, when you sold off, and it was acquired by someone, right?
No. Basically, all of our properties, the leases came due at the same time, like the renewal time.
Yeah.
And it was at the end of 2019.
Okay.
I'd like to say that we did such a great job with the co-working spaces that the landlords wanted to double the rent. And so that's what they did. And for me at that point, I felt like I didn't want to do another 10-year cycle of that. I wanted to continue building communities, connecting with entrepreneurs, but I didn't want to have the baggage of running a co-working space.
Makes sense.
Or just like the physical side of that. Happy to consult with people that want to create a co-working space. I consult with property owners that own the buildings, and they need to have a flexible offering because most companies aren't signing 15-year leases
anymore. Yeah.
And so they need something short-term or something a little bit more flexible, or working on like management, like consulting on management agreements with a co-working operator and the property owner, because there's a tension between the building a business that's short-term leases. WeWork had experienced that.
Nice.
Yeah.
So leases end, you decide not to renew. What happens to the entity, the members? And I'm thinking from a digital asset point of view of like, you have so much information, email. Did you do anything with that as an asset, or is it just?
I have my personal relationships. That is like my main asset. I didn't package it up. I probably should have converted it into a newsletter and ran the biggest Substack of all time.
Yeah.
Who knows? Maybe.
I mean, you could still pick it up.
Maybe reopen that idea. But I do have those relationships.
Nice.
I don't know if I can put them all on a newsletter. We're back.
Yeah.
I don't think I do that. But, I just have those relationships intact.
Nice.
But what I did do in the short term, or right after that, was work with a awesome digital agency in New York City called Coalesce. They were also members for 10 years. So they moved out to their own space, and I helped them with finding great clients and helping startups work with a good agency. So I worked with them for some time, and then COVID happened, and I was with them for some time, and then we moved here.
Nice.
Yeah.
So going back to the co-working, couple questions that come off the top of my head. So as a business model, what do you like about it and what do you not like about it as that sort of business model?
I think it's as a business model, I think it's a great way to cash flow an office space. If you have an office space, it's a good way to get tenants in there. You do have to put some work into it. It's not just like chop up some rooms and people will just start renting it. I think you need to have some kind of community activation, events, community leader, something that bonds people together. Either maybe it's people are connected by the industry, or there's some kind of like ancillary thing that people are connected to, like this place, Collective. I saw something, Collective Labs downstairs. I guess that's like, if you're into fitness and you need a place to work, there's some kind of bond there. So it can't be like just a plain vanilla office space.
Makes sense. I want to say there's a big trend over the last year or two where everyone's trying to build a community, build an entrepreneurship community, marketer community, this community, that community. If you had to give advice to people who are trying to build a community, what would you say? What would be your 80-20 for someone building a community?
I would think, first thing, I would try to figure out who your ideal, what the profile is of someone who wants to join that community, and then figure out how you can serve them.
Is your recommendation be super niche and precise? Can you be vague? Do you have any suggestions on that?
I think being niche is probably the best way to start.
Okay.
I mean, broad information, broad access, it doesn't give it anything special. I mean, people want to be a part of something that's special to them, and they feel like they're in on it early. They're getting some kind of exclusive access. And then when you do that, you have to create a way for them to connect with each other. It can't just be like a top-down, you guys are all paying me a membership fee and you don't know each other.
And you're in a Slack group.
Like you have to create ways for them to engage. And you also have to create ways for those members to participate in the activation. So like co-host an event with the
members,
with the community. So because you'll get more engagement too. Like if you're running some kind of membership program and you're like, come to my happy hour or come to my thing, like some online meetup or whatever, you're not going to get as much engagement unless you invite people from the community to participate. So bring them in, make them part of the process, make them feel ownership of the community and some kind of recognition for what they've done. So that's what I would say.
Nice. And if you had to say one downside of running a co-working business, top of mind for me comes churn and frequent churn of customers. But you tell me what you think is something that was a challenge throughout and something you just always had to figure out an innovative way to fix.
Churn wasn't so bad.
Okay.
Because a lot of these companies were high growth companies.
Makes sense.
So they started off as a team of two, and like each month they started growing. Then, we figured out there's a certain part, like maybe they're too big. Because if they end up being like 25% of the whole thing, that could not be good for us.
Yeah.
So we had to figure out what that limit was. And I think it was around like 22. Okay. Like, you're probably too big. That's when churn could hurt. But we also, at that point, it worked out like... it
was an easy transition.
Yeah. And also like the people who would fill in those seats were probably, the rates had gone up.
Yeah.
So like they start off in the earlier rates and they grandfather that on. So it wasn't bad to replace those.
Okay.
Access was kind of hard to like figure out how to manage access after a certain point. At first it was like 24/7 access. And then we realized, you know what? Midnight's cut off. Nothing good happens after midnight at a co-working space. So because people would go out, get drinks and then come back and like try to after party or whatever, hang out there. And it always ended up bad. So one time somebody left the sink on and it started running and flooded the whole building. That was a bad experience. So that's a pitfall.
Okay.
We learned from that one.
Nice. And then now you're in Austin. What are some of the projects you're working on? What's top of mind for you? Is it more real estate? I think you mentioned a boutique hotel.
Yeah.
And so just quickly tell people what you're working on right now.
Sure. So I'm in Austin. I'm excited to meet everybody. What I love about Austin is that people are very open and connecting. There's a lot of new people here. So I think people get it. Like it's not weird to be a new guy here. Yeah. And people are happy to introduce each other. Listening to your podcast has been a great resource for me. Just listening to the people that are in Austin, hearing like the little tidbits. Nice. That found the one who runs programming for South by Southwest. Yeah, that was a great episode.
Nice.
The Mark Nathan's episode was really great. I love what he's doing. I'm going to probably...
Have you been to any of his events yet?
Not yet, but I think I'm going to go on Saturday for the walk. I think it's
the boardwalk. That's L's event, but yeah.
Okay.
And then I think there should be a coffee Thursday. I'll check and let you know.
Okay.
But he does a coffee first and third Thursdays, which is also a nice way to meet him if you want to.
Well, that's awesome. Yeah. So for me in Austin, I want to connect with entrepreneurs, startups, somehow take my network from New York City and the network I'm building here and bring them together either by hosting events. I'm totally inspired by what you're doing as far as the podcast.
Thank you.
In the video series. Maybe sometime, maybe I'll do something like that.
Nice.
Or in conjunction with a VC firm, partner with them to connect with entrepreneurs or give exposure to those portfolio companies. So I've been thinking about that. Yeah, I'm just happy to be here, happy to connect.
Nice.
And also about that project.
Yeah.
My brother has an amazing property in Mexico, and he is creating an area for retreats. So for startups that need to get, 40 people together, once a year, this would be a great place for them to meet.
And
so
is it ready right now or is it being built?
He's fundraising for it now.
Okay, nice.
Yeah. And it's a 40-room hotel. It's a regenerative hotel. So instead of it being just basically break even as far as like its impact on the environment, it's actually going to contribute.
Okay.
So there's like a component where there's a little farm.
Pretty cool.
It's pretty awesome.
Pretty cool.
And it's only 2.5 hours from Austin. So it might be a good spot.
Nice. Pretty cool. I'll send you this Twitter link. There's a guy named Isaac French. I don't know if you've heard of Isaac.
No.
But I'll tell you about him after. But he does a bunch of like unique properties, and his whole shtick now is an online community for people building niche properties and helping them.
Oh, cool.
Like find an angle. So I'll show you some stuff.
Yeah, there's a lot of interesting membership communities that are popping up in Austin, and I'm exploring them too as either as a member or potentially to work with them.
Nice.
Yeah, there's like a new co-working space. It's called the Malin.
I haven't heard of this.
It's in East Austin. They're doing their launch party, I think, in a couple of days.
Okay, nice.
And there's Hampton. There's like a bunch there. Base is a new one I heard of.
Yeah. Sweet. I like ending every episode with a couple rapid fires.
Sure.
So one question I like asking everyone is, what's your support system? What's allowed you to be an entrepreneur, take big risks, sort of figure shit out on the way? What's been your support system?
First and foremost, it's my wife. She's been there through, I guess, the last big project, which the co-working space. She's been through that until now. She's amazing. She's very creative, entrepreneurial, just kind of like fearless, and also just empathetic.
Nice.
So, yeah, she's been awesome on that front. My brothers, my parents, my sister-in-law, they are my core as far as my base. And then also a lot of the people that I ended up working side by side with at the co-working space. A lot of those founders are part of my like entrepreneurial peer group.
Nice.
Unofficial, but we connect and we meet up a bunch. So I enjoy meeting up with them. And my extended family as well.
Nice. I like that.
Yeah. It's pretty entrepreneurial family. So it's great to connect with them on that.
What are 3 resources you'd recommend to someone early in their journey? Could be anything, books, podcasts, links, whatever.
I should have the books off the top of my head. The thing is, the books that I will mention, now they might seem dated, but at the time they were a breakthrough. In the early days of real estate, Rich Dad, Poor Dad.
Okay.
That was a monster one for me. But maybe it's dated.
Yeah.
But still.
I think there's a refreshed version of it.
Yeah.
I think he refreshed it 2-3 years ago, but.
So that one's
nice.
Great back then. Second, I guess another wave, the 4-Hour Work Week.
Yeah.
When that came out in like 2007 or so,
Big
a little
unlock,
groundbreaking for me. I mean, as far as like automation, all these different ideas about like getting a media diet, eliminating a bunch of like BS from your life, streamlining like your like minimal living and lifestyle. I thought that was amazing. Also, like nomadic lifestyle. I thought that was great.
Nice.
Especially since I was like tied in and locked in on physical real estate properties. I thought it was a great, way to open your mind. What else? I mean, I love reading books about true crime.
Okay.
But the scam ones, like Bad Blood, Super Pumped. Though I'm not saying that Super Pumped's crime, but I just love hearing some of these like big Silicon Valley stories of the $1 billion whale, $1 billion loser.
Nice.
Great books.
Gives you a different perspective.
Yeah. Also, just hear the inside story of how these companies went from like nothing to being so big, and what the pitfalls were. That's a good one. As far as like, did you want to talk about digital resources?
Anything's fine. Any kind of resource.
I use an app called Snipped.
Okay.
It's a podcast app. It's AI enhanced, and so it basically gives like transcripts, summaries. You can ask it questions.
Nice.
You can like
treat it like a chatbot.
Yeah, it's awesome. I've done it with yours.
Nice.
Like I dug into Mark's.
Okay.
And you'll give all the links.
Yeah. Yeah.
Just like what links did he mention or what website did he mention? And I'll just give it to you.
Nice.
Also, it connects with Notion, which I use daily.
Pretty
so
cool.
you can export all that stuff to Notion. ChatGPT paid, obviously.
Nice.
I use Typing Mind, which is like interface for other different types of AI.
Okay. I'll check. I haven't heard. I'll check that one out.
Pretty cool. Like you can switch between like Claude.
Okay. It's similar to Poe.
Yeah.
Poe is one of them as well. Okay. Nice.
Yeah.
I like that.
Yeah, I love it.
Cool. I do the segment at the end where I'll ask you one question from a last guest.
Okay.
And you give me one for whoever my next guest is. What's the most essential feeling that you're trying to create with your business?
I guess a feeling of connection and support. I want people to feel that they are not alone running this marathon. I feel like you do better if you have other people supporting you, helping you, giving you perspective. So yeah, some kind of support and connection.
Nice. And what's your question for my next guest?
What is missing from the Austin startup ecosystem?
Okay.
And if that one's been asked, has that one been posed?
So in some context, but not exactly in this phrasing, but similar kinds of stuff. But that's fine. That's not a big deal.
Oh, I'll leave it. I was going to say, what's the next Austin?
Okay.
But that makes it feel that Austin's going away.
I have my thoughts on that, but
okay.
I liked Austin 4 years ago more than. I think growth is nice, community is nice, but the Austin vibe is sort of changing. It's not really a relaxed college town. It's more like tech and everyone's grinding. And
You went to UT?
yeah, I did my grad school at UT.
So you know from that perspective?
Yeah. So I came in 2016.
Okay.
So Austin was very different in 2016 than it is now.
Yeah. I mean, I've been coming to South by.
Yeah.
Since like
I think South by also has changed a lot. But I mean, maybe for the good. I want to say I'm used to a certain version of Austin, and that's drastically changing. So it's not good or bad. It's just different. So
I think there's some things that Austin could borrow from other cities.
Yeah.
You know, I think there might be a little bit too much of a sameness
I agree.
between different like bars and restaurants. And
I think there's a lot of zoned projects that will change that, but all of those are like 5-7 years out at least. So
longer term ones.
yeah.
Like mixed use development property.
Yeah, so like the domain, right?
Yeah.
So there's allegedly like 3 more domains around Austin that have been zoned and approved, but like they haven't broken ground yet.
And I think they're south.
Yeah, one's Riverside, one's north in Parmer, one's in Round Rock. So there's like a couple different ones.
And I heard about some like surf
I haven't heard
surf
about this.
pool
I haven't heard.
community. Should be cool.
There's one in Bastrop, which is like an hour and a half away.
I haven't been to them.
But no, I don't know of anything here yet.
I went to the Waco surf.
Yeah, Waco's not.
That's awesome.
Waco, yeah.
That was awesome.
Sweet. But no, I appreciate you coming on. We'll plug everything.
Great.
Reach out on LinkedIn if anything else. And is that the best place for people to reach out
Yeah, I think
to you?
LinkedIn's the best one.
Okay.
Yeah.
Sweet.
That or my website.
And we'll link everything and we'll
Okay. Awesome.
But no, thank you. Thank you for coming on and I appreciate the time.
Thank you.